I think that the folks writing these laws have just an extremely poor understanding of economics and capitalism.
Hey guys, welcome back to the channel. Today we have Chamath on the In Podcast, giving us the news in stocks, economy, and the financial markets. We've had some pretty severe corrections recently, and the correlation between the stock market and the Fed money printer is becoming more evident. Recession is a certainty at this point, but the question is how soon and what that will do to the price of goods and services in the meantime. The crypto market will be one of the biggest affected by this economic downturn, and all indicators point to the massive similarities between the current recessionary climate and the stock market crash of 2008. Let's get into the interview with Chamath as he lets us know what to expect in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The first thing that it does effectively, and everybody can understand this, is it caps the profitability of a company. Right? Because it effectively says, if you look at an industry that is over-earning, then this council will essentially see money that should be reappropriated to employees. Now, that idea is not necessarily a bad thing. For example, you see that all the time in technology, right? If you look at the EBITDA margins of like big tech and how they've changed, they've actually eroded over time as the companies have had to generate more revenue because employees demand more and more of those gains. That's an implicit part of how the free market economy works in technology. So, if you don't feel like you're getting paid well at, Google, you go to Meta and you get paid more, and vice versa. So there's a natural effect of people being able to do that in certain markets. But when you impose a margin and essentially say, you can only make 10% because the rest of these profits I'm giving to these folks because I've imputed their new wage to be something that's much greater than what they were paying before. The unfortunate thing is what Friedberg said, which is that you will rebuild that business without those people because it is the rational thing to do. And so unfortunately, what you'll do is you'll take a bunch of people that should be in the economy, right? Think about like new immigrants or young people that are first getting on their feet. They'll take these jobs. I worked at Burger King.
Yeah.
I worked at Burger King when I was 14. That's how I got my first.
Yeah.
Those jobs won't be there to be had. And that has ripple effects as these folks get older or try to get more ingrained in the economy. And this is what I wish California would understand, is that these things aren't free. And even though they seem like you're coming to someone's rescue, there's all kinds of unintended consequences and very obvious consequences that you're ignoring by not really understanding how the economy works.
The increasing prices of goods and services, along with stagnant wages, slower business growth, and a surge in layoffs, a recession is a certainty at this point. Some believe we're currently in a stock market crash as we speak because of all the panic selling that's going on. The amount of global market value that has been wiped out in just the last 5 months is astounding, and now the banking infrastructure is being threatened.
Also, the sad reality is that within a few years, unfortunately, you'll know a lot fewer people that work at McDonald's because the number of jobs for humans will be dramatically lower.
They got rid of the cashiers. That's gone already.
Or what people will be more acutely aware of in a number of years is how expensive McDonald's has gotten. Because if the price doubles...
Well, no, that won't be. Because again, McDonald's has a very simple... No, not even the market. McDonald's is not stupid. They understand how to use Excel. And so they'll think, well, I can amortize a robot versus actually jacking up prices, because what McDonald's understands is the sensitivity of pricing to demand for their product.
Yeah, that's right.
Right? I mean, they are the most intelligent about how they price. Anything at the sort of the lower end where you're capturing, nickels and dimes, they are the most sophisticated in understanding supply, demand, and the curves. And so to think that they're not going to just invest heavily now at the corporate level, the next franchisee of McDonald's will still pay $1 million for a franchise fee, but will be given a bevy of robots that they rent from McDonald's, and they'll have to hire half or a third less. That's the real shame of this, which is the number of people that should actually be gainfully employed in the economy will then shrink again. But in this case, it was because legislators just completely don't understand how incentives work and how the economy works.
And people are not clued into exactly how well narrow AI machine learning is doing right now.
By the way, I'll say
it's really moving quickly.
One general way to think about this is technology is introduced and the technology creator captures roughly a third to a half of the value increment because of the delivery of that technology, the productivity increment. So let's say that it costs $15 an hour to employ a McDonald's laborer today. And let's say that you can build technology that the amortized robotic cost is $10 an hour. There will be a technology company that will make $2.50 an hour off of that. So net, what ends up happening is productivity has to be gained and prices will reduce. And so, there are moments like this where there could be an acceleration of technology and also an opportunity for new industries to emerge. And when that happens, new jobs emerge too.
I think people misunderstand that Moore's law has actually not ended. And this is something that a friend of mine, Adam D'Angelo, characterized to me. Beautiful human being.
From
he and I
Quora?
worked together. He was a CTO of Facebook when I worked there. So we've known each other for 15, 16 years, and now he's a CEO and founder of Quora. But, the way that he described it to me, which is so true, the minute he said it, I was like, my gosh, it's like Moore's law never ended. It just shifted to GPUs, because the inherent lack of parallelization that CPUs have, you solve with GPUs. And so that's why the surface area of compute of innovation has actually shifted, Jason, to what you're saying, which is, all of these new kinds of machine learned models, because you can just now brute force and create such a tonnage of compute capabilities and resources to solve these problems that weren't possible before. So, you see this thing, fun things like Wall-E or, DALL-E, sorry, and more sophisticated things like GPT-3. But he's right, which is that, we are at a point now where all kinds of expert systems, which is sort of like V1 simple forms of AI, are going to be completely next level. And so when governments don't understand this and they try to, step in, they're going to be shocked at how much faster they're pulling forward the actual future they actually are trying to prevent. Here's another example of this in a law that just passed. So in the IRA, the Inflation Reduction Act, we granted CMS and Medicare the ability to negotiate drug prices. And we actually also capped the total prescription cost that any American can pay at $2,000. Now, it turns out that overwhelmingly most Americans will never spend $2,000 a year on prescription medications. But there will be a few, and they bump up against drugs that cost millions of dollars. So there's a drug for, SMA that's like, 2.4 million, and like, beta thalassemia of like 2.8 million. And we will all bear the cost of that. Now, if CMS and Medicare go and really crunch those costs, what is pharma going to do? Well, pharma is going to do what is the obvious thing, which is like, if you're going to cap what I can make, I have to completely change my R&D model, and they're just going to use AlphaFold. And what it's really going to do is potentially put a bunch of research scientists out of work. And those are folks that should probably for our general future be gainfully employed, but the nature of their job is going to change completely because the economic capitalist incentive of big pharma is going to move towards technology, which is, an AlphaFold and their protein library is the equivalent of AI and automation for McDonald's. So this is where, again, governments have to be super careful that they understand what's actually happening, because they're creating incentives, I think, that they don't completely understand.
Even though the market may be operating on fear right now, the coming months will be a clear indicator of what we can expect from the stock, crypto, and capital markets. The average consumer will be the one affected most by this recessionary climate, and something else to keep an eye on is the financial corrections happening in the credit and housing markets. The interest rates on loans are rapidly increasing, and Chamath believes we may actually be seeing a bubble there as well. What do you think about the market conditions right now, and how do you think the average consumer will be affected? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.